Good morning, this is Jack from Charting the Markets, and this is the pre-market webinar for the morning of Thursday, the 18th of June. My disclaimer, I do this for educational purposes only. I'm here to share my tactical analysis with you. I hope you can take some of what I'm doing and learn from transfer trade charts, and I'm not here to issue trading signals. This is a video for paying subscribers. It's Charting the Markets.substack.com. It's published on YouTube after a delay of 24 hours. All right, great. Let's have a look at ES, where we saw a pretty serious-looking breakdown yesterday after the Fed meeting, but we've covered much of that overnight on the Iran peace agreement. Now, we're at quite a critical stage here. I'll talk more about that on the daily charts, but this could really go either way depending on which way it goes today. We shall see. In terms of NQ, we saw a bit of a breakdown there too. Didn't get below the monthly pivot. The ES actually got below the monthly pivot and has come back and is trying to reconvert that back to support so far successfully. Could this be a bull flag forming on NQ? Very much so. Could this be a bull flag forming on ES? Yes, but not as nice as the one on NQ. RTY, definitely yes. You can see I've drawn the resistance trend line on it here. On YM, kinda. But this has been far the strongest and actually has been making higher highs. DAX, still wondering about a retest of the all-time high, and we could go directly up into that. ESDX has been making higher highs already, and Nikkei is already at a new all-time high. So we have kind of a mixed bag. We've still got two sell signals left, which are the weak sell signal on ESDX and on Nikkei. I'm not taking those particularly seriously, but they could obviously play out if we are going to see some more downside on equities. All right, let's have a look at the bigger picture charts. And this is the key level I'm looking at here. It's the daily middle band on ES, and I've got that at 7557. We closed at 4992 yesterday. We are currently up 64, so that would put us basically on the daily middle band right now. So almost exactly. Now this is the key level for today because we saw a significant break below the daily middle band yesterday. Are we going to close back above it today is the key thing. Do we see a rejection? If we do, ideally it would be a strongish rejection, which would get us back up to over the body of this candle here. And I'm thinking we may well get that. An end to the Iran war is good news, whatever the agreement actually looks like. So we will see. We will see whether we get that. If we go down, well, I was mentioning yesterday morning that if we saw a break below the daily middle band, it could be that what we were going to do here is we were forming some kind of a bull flag. If it was a conventional flag, it would be A, B, C, and then we would make a low below this low here at 7302.75. Actually, no, that must be a little lower. Maybe about 72.95 or something. But we'd make a lower low below that, or alternatively, of course, we could be forming a triangle, in which case we could make a higher low. But that higher low would likely be lower than we are now. So that's what I'm thinking we might be seeing here. And we've got a bearish leading week next week. So this could be a period of consolidation. So I'm waiting to see whether we actually hold above the daily middle band and close above it today, and that's an important little inflection point. In terms of the SPX chart, pretty much the same. Hourly chart, no current divergence. 15-minute chart, no current divergence either. So we don't really have any clues from the close last night. On the Qs, we closed slightly below the daily middle band, although this held up better than SPX. That closed at 725.50 yesterday, and Qs was closed at 722.50. So we were three handles below that. Again, I'm watching to see whether that follows through today or not. We don't have any buy signals here anymore, really, because this RSI 5 buy signal made the possible near miss target. The hourly buy signals made target 2. No divergences on the hourly chart, no divergences really. This RSI 5 buy signal reached the possible near miss target as well. In terms of Dire's been holding up the best. Had a nasty looking candle there yesterday, but we'd already made it back to the resistance there. So this trend line, this pattern here, now has a rising support trend line, which is here. So we will see how that goes today. And we could see a move down here because the question is, what's the market reaction going to be to basically the US conceding to all of Iran's demands today. In terms of the markets, I don't see why that would be a bad reaction. It certainly avoids a lot of trouble in the summer. I don't agree with Trump an awful lot, but yesterday when he was saying that it could cause a major economic crisis if the Strait of Hormuz stayed closed, I agreed with him there. It could have done. And actually, I think the smart thing to do was pretty much exactly what he'd done. I do wonder if he could have got a slightly better deal, but I think he was up against the wall, and Iran weren't keen to concede or anything. In terms of the hourly charts, we had an hour of the RSI 5 sell signal fixed, that made target. We still got I'm not sure, I think that gap might have been closed here or dire. Not quite. So we've still got a potential setup where we could we've got an open gap which is holding us support so far. This will go the way of the others. There's an obvious target below in the event that we're going to see more downside, as we've got this rising support now in the 505 area. All right, let's have a look at IWM. Okay, IWM. Daily chart, we came pretty close to the daily middle band. We still got the daily RSI 14 sell signals fixed pretty much across the board, of course. I am wondering about more upside here, and I'm thinking we may well see that. In terms of, this is the rising wedge here. Obviously, we've got wedge support down here at about the 282 area. Not seeing a compelling reason to think that we'll get there, but if we see weakness from here, from where we are right now, for the rest of the day, then that opens the door to significantly more downside next week. Although probably in the context of an overall bull flag forming. DAX, still wondering about a retest of the high, back tested the daily middle band yesterday. Nikkei is at a new high right now. So we will see. If we go up towards this trend line here, then we could go up significantly further on the way to that. All right, great. Let's have a look at the DX chart. Now, DX, this has, obviously we had the double top. I was talking about the possibility that would reject, and it did. Got back to a higher high yesterday, and has continued higher from there. Now, we've got a possible 60-minute sell signal growing, but I just wanted to show you how this looks on the daily chart. On the daily chart, what I was talking about was the possibility that we would get back up to this high here at 164, and we beat that overnight at 100.8, in which case my lean would be that we would continue playing up. We would continue this double bottom, continuing to play towards the target here, which is in the 104.572 to 105.239 range. And I think there's a pretty good chance we're going to do that unless we see a strong rejection here. We will see how that develops. I wouldn't be surprised to see a bit of consolidation here, though. Not really seeing an awful lot on the other currencies. We've got on USD, possible double bottom, and we certainly got a possible 60-minute buy signal brewing. GBP USD, not seeing an awful lot here. So USD JPY, we've now made the full target at the retest of this high here, so that is now signed off, and we've made basically the extension double bottom target as well. We're up at 160.89. What I would love to see is a retest of 162, but what I would say is that the Japanese central bank has been intervening to take this down whenever we reach this kind of level, and obviously this is what happened last time, and that was a central bank intervention. We may well be about to see another central bank intervention. USD CAD has moved up, and I think we've eliminated the possibility that this rising megaphone is going to continue to be a thing. We do have a possible 60-minute sell signal brewing, and that's close to fixing at the moment. Australian dollar, not really seeing a lot. NZ, not really seeing a lot either. Bonds are interesting. Now, bonds, we actually saw some downside on there yesterday, but ZB and ZN actually differed quite a bit. ZN is breaking up from this setup here. ZB rather. ZN actually broke down for a double top with a target in the 109.04 area, and looks like it might be rejecting higher. We do have the possibility of seeing a significant rally in bonds here. So I've got IHSs breaking up on TLT and down on TYX, and that is opening the possibility that we could see significantly higher. Looking at oil, now we saw a rally yesterday, and we've seen a retest overnight. This is leaving us with a potential double bottom. We've still got a 60-minute buy signal fix. What we haven't got is we didn't have enough of a sustained rally yesterday to give us positive divergence on the daily chart. Nonetheless, I'm taking this double bottom seriously. Although this was a very odd spike here, which lasted minutes. Went up and then almost precisely came down. So I was wondering if it was real, but it's on all of them. So I'm looking at this as a potential level bottom. If we saw a sustained breakup over about 83, this would have a target in about the 87.5 to 88.5 area. We could well see that rally. We are due an oversold rally here on oil and CL. And also the other thing is that the Strait of Hormuz is opening back up, and that is going to mean that in 4 to 6 weeks, we start getting serious amounts of oil through the Strait of Hormuz, and then at that stage, we can start building up these stocks which have been heavily depleted. But stocks have already been heavily depleted, and we may well see some spikes there as shortages are seen, because, of course, as soon as oil starts going through the Strait of Hormuz, it's still going to take several weeks to arrive. I think big oil tankers tend to proceed at about a fast walking pace, or at least so I've read. It's going to take a while. I think the last one to arrive that had been through the Strait of Hormuz for the war actually arrived something like 10 weeks later. So we are looking at something of a significant lead time. In the meantime, we may actually see a lot of turbulence on oil as there are short-term shortages, because we are looking at something that the oil industry was describing as tank bottoms. We are getting, overall stocks are very low. So is it credible that we see a bounce back up into the mid 80s to 90 area? Yeah, it is. And I'm thinking we may well see that, and this may be the start of it. Doesn't necessarily have to be, but we're going to see a big rally fairly soon. CL, we've got another nice looking level bottom. HO, we don't. RBOB, little level bottom here potentially, but not really been trading on the same basis as the others. NG, we had a sell signal here that's made target, and so far we're holding the weekly pivot area, which is the area I was thinking we might fall down to and then potentially reverse back up. We don't have a double bottom here yet. It looks like a little triangle forming here, so I'm waiting to see if this follows through to the downside, in which case we might be heading for a test of this low here in the 2.89 area. Right, looking at MGC, I was talking about all the sell signals there yesterday. The one on gold made target. The one on silver made target. On palladium, not quite made it to the possible near-miss target, and platinum made it to the possible near-miss target. So we've exhausted most of the divergence that we were seeing here. Could we see a rally from here? Yes, potentially. Don't necessarily have to, but we will see. We could see a retest of these lows here on silver and gold to set up little level bottoms to close off this move to the downside. Overall, I'm leaning bullish. HG saw some weakness there yesterday. Haven't recovered an awful lot of that on the move up on equities overnight. We'll have to see how that goes. On the KC chart, we are still consolidating near the highs. Possible little level top here. SB hasn't quite made it over declining resistance yet, but I am thinking this is potentially bottoming action. CC, wondering whether this is forming an overall consolidation triangle, in which case I think that would probably lean bullish. So looking at lumber consolidating on what looks an awful lot like a little bull flag, setting up a retest of this short-term high. CT, nice break up here, no obvious reversal pattern yet, although I am wondering about this. So that could be an inverse head and shoulders, so we could see more upside directly. Now I'm just going to mark that in. Not sure that's strong enough to really. It's arguable, but we've already broken up from an inverted head and shoulders there. CW, we've broken up for a double bottom with a target in the 628 to 630 range. 60-minute sell signal fixed. Corn, possible bottoming action. Soy, Possible bottoming action. 60-minute sell signal has reached the possible near miss target. ZL is trying to break down from a head and shoulders here with a target in the 65.50 area. Live cattle should be on the way back to the retest of this high here in the 251.50 area, and is getting pretty close to that. HE, possible bottoming action, kind of looks like a short-term bear flag forming, setting up a retest of this low. All right, great. Let's have a quick look at questions. No questions. I think that's a wrap. Everyone take care. Have a wonderful weekend and a great Juneteenth, and I'll catch you guys again on Monday. All right, cheers.